Welcome back to the Coffeecon Season 2, Episode 4. I'm Padmaja, and this time we are back with the news that has left the public in an uproar. It has disturbed the inner workings of many financial institutions operating in India. Any guesses what might be the topic? Yes, you have guessed it right. We are going to discuss the recent plungation in Adani shares. To know more, be with us till the end of the video. The year got off to a bright start for one of the India's richest men, Gautam Adani, when he announced a follow-on public offer to raise INR 20,000 crore from the local stock market. But soon after the publication of a study accusing Adani of potential fraud by New York-based financial research company Hindenburg Research, the conglomerate started encountering problems. The investigation claimed that Adani Group was engaged in stock manipulation and accounting fraud. As a result, Adani has fallen from his pedestal as the third richest person in the world and is currently not even listed in the top 20. The main reason for this fallout is the report. As all of the Adani Group's firms experienced sharp decline in share prices following the publication of the report, in just 1 week the Adani Group lost $108 billion, including Tycoon's personal worth of $48 billion. So let's see what are the exact claims of this report. The main claims of the report after 2 years of investigation were that group has been extensively involved in stock manipulation and accounting frauds. Shell firms owned by Adani's close family members were allegedly trying to manipulate stock prices for tax havens like Mauritius companies. According to Hindenburg's claim, Adani family holds a lot of key positions in the group, hence financial decisions are in the hands of few. It mainly cites Vinod Adani as a part of most of the Shuttle network dealings. The key listed companies have taken a substantial leap, which include pledging shares of their inflated stock for loans. Secondly, the conglomerate may face a financial crunch with its 5 to 7 listed companies reporting their current ratio below 1, which implies near-term liquidity pressure, that is, insufficient cash flows. Recently, the company was under scrutiny due to 4 major government frauds which have alleged money laundering, theft of taxpayer funds, and corruption, totaling an estimated of US $7 billion. They also have brought our attention to the report has also brought our attention to the auditing and accounting irregularities of the firm. They have also identified numerous undisclosed related party transactions by both listed and private companies, seemingly an open and reported violation of Indian disclosure laws. The said report strongly claims that the reason behind Adani Group's operating freely while committing a scam is because investors, journalists, citizens, and even politicians have been afraid to speak out for fear of reprisal. As for the consequences of the report, that will be explained by Ketki.
Coming to the impact and consequences of the report. Although the timing of the report is questionable given that it was released on January 24, one day before the FPO, its allegations have caused serious concerns about corporate governance and prompted all investors, including large entities like the State Bank of India and LIC, to clarify their limited exposure to the Adani Group. According to multiple media reports, the Indian stock market regulator reportedly has investigated the charges contained in the Hindenburg report. The Adani Group has denied all the claims made in the report and provided clarifications. But the report has negatively affected the market sentiment and reduced the total market value of Adani's group to 50%. Adani called off the 20,000 crore FPO. Despite the FPO being completely subscribed, Gautam Adani decided to cancel it due to the enormous decline in the stock prices of Adani Group. Adani claimed that the decision was made by the board to safeguard investors' interests and the fund raised would be refunded. A historic FPO that was set to occur in the Indian stock market had to be cancelled. As a result, investor confidence was further damaged and Adani's stock continued to decline. How have the financial institutions responded? India's central bank, the Reserve Bank of India, launched an inquiry to assess the dealings of Adani Group and its exposure to various Indian banks. The RBI had asked the banks to share the details of loans and other financial transactions that had or were to take place between them and any of the Adani companies. Consequently, as a response to RBI's inquiry, international behemoths, including the wealth investment division of Citigroup Inc. and brokerage firm Credit Suisse have announced that they will no longer accept the bonds of Adani-led companies as a collateral for margin loans. Several rating agencies reportedly have started looking into the creditworthiness and dangers of the debt led by the Adani Group. In a statement, CRISIL stated that it was keeping an eye on the Adani Group and continuously monitoring all outstanding ratings for group firms. Lastly, we have expulsion from Dow Jones Sustainability Indices. In response to claims of stock manipulation and accounting fraud, S&P Dow Jones said in a statement that it would be withdrawing Adani Enterprises from its Dow Jones Sustainability Indices. As of February 7, Adani Enterprises had recently joined the index. Despite the expulsion's seeming insignificance, it indicates a lack of confidence among foreign investors in the Adani Group. And it may have an impact on how they view investment opportunities in India. The market chaos caused by the stock of Adani Group might have been influenced by concerns about mismanagement and corporate fraud in a nation that was just last month hailed as the top investment destination in the world at the World Economic Forum in Davos.
So, these were some of the reasons why some Adani stocks plunged over 50% within 24th January to 6th February. Now the situation has stabilized and performance of Adani Group stocks is back to normal. Most Adani stocks are trading on a firm note today. The fallout may not have a lasting impact on the group as the price of their share is rising again, but the bloodbath completely rattled the Indian stock market. Yet, it is speculated that they will continue to be unpredictable for a while. The Adani Hindenburg narrative seems to be going to keep the markets busy for a very long time. We'll be back again with another interesting video. Till that time, thank you.